traders, welcome to the TMT Stock Market Strategy video for Friday, August 5th. Well, the market's trying to hold in here, tried to rally. We were up about 6 handles in the ES, sold off back to flat, and then we had a small dead cat bounce. So what is that telling us? Well, right now it's telling us, number one, we have a big risk event going on, which is going to be the non-farm payroll numbers, aside from the Bank of England rate cut and added more stimulus that we had yesterday. So that was a positive for the markets, or at least they thought it's a positive because there's more free money. To me, that's not anything positive at all for the equity markets. At one point in time, it's going to be a big negative, and it's turning out to be a big negative. But that's another conversation for another time. Right now, with non-farm payroll numbers that are coming out this morning, it's not the number, it's how they react to the number. So we have gold that's been rallying. We have equity markets rallied. We'd have the dollar rally, and we had bonds rally. So somebody's wrong here in this group. So we have to see who is wrong. And I do believe at one point you probably get equity markets roll over along with gold right now, because gold has been well bid up. Gold does not act like this for no reason, and it's a big fear factor trade going on. VIX at extreme lows, complacency across the board. You have to be careful with that as well. Again, I am not saying that the markets are going to sell off and crash. I'm saying you have to be knowledgeable enough to realize where the risk may be coming. And remember, risk comes at a very fast pace in the markets. So even if you're day trading, you have to be cognizant about what's going on around you. So moving forward, my trading model is getting more and more on the sell side, right? We don't have a full-fledged sell signal yet in my model, but I'm just going to show you a couple things which is starting to brew. And I think if we have another push lower, and it doesn't have to be big, I think my model will be on a sell signal, ready for a sell signal trade. So we have the advanced decline with volume, as you guys know. This is one of my great measure of breadth of the market. We have the S&P sitting right up in here. We're going sideways for 16 trading days. What happened to the breadth? Internals started to deteriorate. Now we're below zero. Doesn't mean we can't pop up tomorrow, because remember, news does trump the charts. So I want you to take an unbiased approach. Go out with a neutral morning, neutral day, at least the start of the day, and let's see where we end up. Now, if the markets decide to sell off, and they sell off hard for real, okay, then we can start looking to sell rallies. But if the market breaks up higher, we need to really pay attention to that, because we've tried to break out a couple of times and we failed. Met with a lot of selling. So there could be a lot of selling even if we do rally. And even if we rally today, okay, the first general move, and I don't mean the first reaction to the number, but the first move, meaning the day, the trend of the day, generally is the wrong move. So if we're up tomorrow, we should see a market reverse on Monday, or even not Monday, but for Tuesday. So just keep that in mind. Doesn't have to happen, guys. I've seen it many times, 29 years doing this, okay? So just keep that in mind. All right, next, I want to show you something really interesting. This is definitely one of my trading models that's in my model, and markets rallied, and it is on a sell signal, full-fledged sell signal. I didn't put the vertical crosses because I didn't want to get too busy on the chart, so I wanted to let this one go. But you could see this one here went on a sell signal just the beginning of August, and we are starting to move wider and wider, meaning there's more momentum to the downside. Okay, so this is on a sell signal, as well as many other of my indices and indicators that are in my model. Now, this is something that I haven't seen in quite some time. Yes, I showed this to you before yesterday, but I want to show you this Bollinger Band. I haven't seen this tight, and I would probably say in several years. Okay, now even this Bollinger Band, you notice how tight we were here. It wasn't as tight as this. This telling me the VIX is going to explode. Okay, explode, guys. Positive divergence. You can see that here. Okay, as the markets are just basically grinding at a slow pace. Oops, sorry about that. Let me just get that back down here. So pay attention to this tomorrow and the next couple of days. Now, part of what a lot of people like to use in the VIX, and what I've been showing you for many months and years actually, is when we get a break out of the band and closing, and the next day we close back in the band and we take out that local swing high, That's a buy signal for the VIX, a sell signal for the markets. Now, we're so low, it does not have to happen. If you recall, look back here. You could see here where we didn't even break out of the band. You could see that closely, right? Let me get a point. You could see that we didn't. We touched it like we did here, but we didn't break out of the band, and we had a major move up from 13 and a half all the way to $21 in 5 days. That is what I'm saying. That can absolutely happen. Okay, especially with the VIX. So be on alert for this morning, guys, because I do think that this is this is ready for an explosive move. Here's the VXX. Just wanted to show that to you as well. Okay, it is not on a buy signal. Remember, we needed to take out that swing high of $10.79. Now we need to really break back above, and we need to cross back up here again. But again, look at how tight the Bollinger Bands are on a VXX system, okay? Look at MACD trending up in a histogram. This is ready to cross higher, guys, as well. So easily can get to $14 here. Easy. So just keep that in mind. It could be a real good trade in the coming days. Next is going to be the 5-minute spiders. I just want to show you where we are and what a mess that we've been in for the last 16 trading days. And if anybody says, oh, well, what's going on? Nothing is going on. That's exactly what's happening. Up, down, up, down. Now, if you're a scalper, you're having a great old time. But if you're not, there's absolutely no trend. We haven't had a trend. We had 1 day of a breakdown, excuse me. Now, look at this. We're in this channel, right? This upward rising channel. What happened? We broke out of it and broke down, and we never really got back in it, okay? And we never really regained that upper end of resistance. So this to me is a little troublesome. So I just want you to be aware of that as well, okay? All right, Spiders Daily. Again, we're still in that range from the 5-minute. All right, now we had the 21-day catch up. So as this 21-day starts to surpass the price and we continue to stay here, the 21 will start to curl back down again. I am still looking for a 210 to 211 print for a pullback in the spiders, okay? And that'll get us to 2120, 2130 in the ES. So that's what I'm looking for the pullback when that does occur. Doesn't have to, but just want to let you know. Here is the 60-minute. You could see we've been curling lower and lower, making lower lows and lower highs in our indicators. And again, not really a great deal, but it is if the market's price is hanging in here, that is still a very good sign. You cannot deny that it's still bullish until we start to break lower and start making some flags as we move higher, making lower lows and lower highs. That's bearish symmetry. This is not, unfortunately. This could stay here for a little bit longer and then break down, but we are seeing some signs here that the markets are starting to deteriorate. So we need to have caution here. Here's the 30-minute. Look at the Bollinger Bands again on the 30-minute. So Bollinger Bands on the 30-minute, Bollinger Bands on the VXX system, really starting to pinch. So that's telling me that I think we might have a big move today. Diamonds and the transports. Again, you've seen this overlay before. Transport's definitely not helping what's going on. And if the transports really start to succumb to some selling, I think you see this pivotal low, which is the Brexit low, and then, of course, the mid-January low from down here. And then I think that would really start getting the markets to get going, okay? Transports, just want to show you where we are here. Didn't move at all today, so that's not a good sign. IWM, these are still areas of resistance, 121.17, and we have a new area, 121.60. That's the IWM. And lastly is the Qs, still at 115. 115. Actually, let's call this 116, guys. Up in here, I'm going to change that, but 116 is going to be the target. Let me just get rid of that. 116 and the IWM for the daily resistance levels. All right. Be careful out there this morning. And if you're not used to the volatility, step aside. Let the markets calm down before you jump in. And if not, don't forget, guys, you always got next week. Have a great weekend, all, and we'll talk to you on Monday.